Welcome back, guys, to another video. In this video, we're going to be talking about Tesla and how somebody spent $72,500 on Tesla 1000 calls expiring this week. Now, before we get into the rest of that, make sure you go down and hit that like and subscribe button so you get all of this news all of the time and you get notified of all of my new videos. Now, Tesla has been an extremely strong company this year, and we can see by this graph that they were kind of hanging out in October, got news of the S&P inclusion, and rallied all the way up from the 400 range up into the mid to high 600s. Now, let's take a look over here, and Tesla jumped around 4% and hit its all-time high on Friday ahead of its unprecedented inclusion with the S&P 500 index. Now, this is kind of rare for a company like Tesla to be added to the S&P 500 since it's extremely volatile, and the market value of nearly $650 billion as of Friday morning. Tesla will be the largest company ever added to the S&P and account for more than 1% of the index. So that means that all of the value investors and the index fund investors, when they buy the S&P 500, 1% of that position is going to be made up of Tesla. So if you don't like Tesla, it's going to be too bad because you're going to have to own it. Now, Tesla's the biggest electric vehicle company in the world right now. They're ahead of everybody in terms of production, battery, making their own chips, autonomous vehicle production. As we can see over here, Elon is in talks for full level 5 autonomy for 2021 in some areas. Now, this means that you can drive your Tesla car without even driving it. It's basically a robo-taxi, which they are also going to be rolling out more next year. Now, if Tesla can get this fully functional and into all of its cars, this is going to be cause a massive increase in their stock price, because it's such a futuristic technology that nobody's expecting right now. Now let's get into this absolutely insane options play that somebody has bought expiring next week. So now if we go over to Will Mead's Twitter, he tweeted out on December 18th at 11:35 a.m. that someone just purchased 500 Tesla 1224 1000 calls for $145. Now, this is about $72,000 worth of Tesla calls that expire really soon. The theta decay on these is going to kill these contracts instantly, especially when they're so deep out of the money like these are. Now, if we go over to the option chain of Tesla for December 24th, we can look at these 1,000 calls, and they're now valued at 55 cents, which means the position went from being worth $72,000 to about $27,000. That's about a 60% loss on the position. Now, when looking at this, it doesn't make a lot of sense why somebody would think Tesla is going to rally around 47% right after they got included into the S&P 500. It could be somewhat of a hedge, where somebody is hedging their position, maybe for shares or puts that they have. They want some protection, but this doesn't make a lot of sense because it's relatively impossible for Tesla to go to 1,000 in the next 4 trading days. Now, here's a possible explanation for why somebody would buy 500 Tesla calls expiring so soon at such a out of the money price. It's just so deep out of it's about upper 40% out of the money. It just doesn't make sense. Now, I think what it could be is that it's somebody putting on a credit spread. Now, this involves buying these, and they could have sold one of these contracts down here for a net credit. Now, this would make a lot of sense. Since Tesla just got added into the S&P, they've kind of been riding this S&P inclusion news for the past month and a half, which has massively increased their stock price. Now, that was kind of like the rumor part of the buy the rumor, sell the news. And now that this has been fully completed, people might sell off their Tesla shares because they don't have any more news that is going to act as a catalyst to send the stock moving higher. We also have a lot of uncertainty on whether or not we're going to get stimulus this week, if at all. Now, since Tesla is now added to the S&P, if we don't get stimulus, most likely we're going to see a market correction or a pullback, since everybody kind of is pricing in that we're going to get a certain amount of stimulus at some point because the country kind of needs it right now. If, however, this is not a one leg of a credit spread, this just goes to show you how risky options are in general, and especially on stocks such as Tesla, where the implied volatility is over 100%. There's no reason to be buying these 1,000 calls that are 47% out of the money for a weekly expiration. If on the off chance that this does hit and these option contracts go in the money, this individual will have turned $72,000 into about, let's say they're worth on expiration $1,100. They would have turned $72,000 into around $500,000 or $500,000. That's not bad for a week's work, but this is so unlikely to happen. Tesla would need to have the most ridiculous news possible come out, and we would have to get a massive stimulus in order for this to even have a chance of hitting. Now that's going to be it for today's video. If you guys liked what you saw in this and the information that I showed you guys, please go down and hit that like and subscribe button and comment down below your thoughts on if this play is even possible or what you think it could be. Hope you guys have a great weekend.